All right, so we're going to continue here with Chapter 8, Setup 7, buying into or out of halts. Now, this is not new to you in just the concept of circuit breaker halts, and already in a number of the live trading examples, you've seen me trading stocks right around halt levels. As stocks are approaching halt levels, perhaps holding into the halt level, perhaps taking profit just before it, or even doing a dip trade where I'm buying as something is dipping down to bounce off the halt level going down. We'll get into that a little bit more in Setup 8. Setup 8 is specifically on the dip trade. But here in Setup 7, we're going to talk about buying into or out of halts. And this is based on my experience trading circuit breaker halts, which has certainly changed in the last 6 months. Interestingly, maybe the last year almost. Prior to that, circuit breaker halts were not as frequent. They are a daily occurrence today. And just as a refresher, the type of circuit breaker halts that we're talking about are the type of halts we're talking about are circuit breaker halts. They're not halts pending news. They're not halts on pending investigation or anything like that. Although you can trade coming out of a halt pending news on resumption. You could do that. And I'm just going to grab this slide here, circuit breaker halts. Let's see, just to put this up here for you guys. So here is our, so here's our volatility halt slide. This is from earlier in the small cap course, and we talked about it in the starter course as well. So what we know is that stocks priced over $3 that are tier 2 securities will halt every 10%, and that 10% is a rolling period of time. So it's 10% above the average 5-minute price. So the 5-minute average price is a 5-minute rolling window. It's not like it resets every 5 minutes. It's constantly rolling forward. I seem to be thinking it's rolling forward about every 30 seconds based on some of the things that we've watched in the live archives and in some of the examples we've had, but I'm not certain that that's always the case. So or even the time exactly when it refreshes. But in any case, that rolling 5-minute period essentially creates a bracket around a stock that within that 5-minute period, a stock cannot go higher than this amount or lower than this amount without getting halted due to volatility. So this is a mechanism that effectively was designed to reduce volatility in the market because, of course, if you think back to some of the times in the market where we've seen huge levels of volatility or even flash crashes where stocks have just started dropping and then they just start taking out stop orders left and right and left and right. And when that real panic sets in, stocks can just shed huge amounts of gains. Now, they can bounce off those lows really strongly as eventually some traders will step in. And there's actually a story about leading up to the Great Depression, not in October of 1929, but earlier, maybe a few years earlier, where the market did have a very, very rapid drop and everyone was selling. And one of these big bankers at the time, I don't know if it was like a JP Morgan or one of these big guys, comes in and starts walking across the floor and he says, I'll take 10,000 shares of this. I'll take 10,000 shares of this. And he single-handedly changed the market sentiment. He's buying? Okay, I'm buying. Buy. And all of a sudden, just like that, with maybe $10 million, he changes market sentiment from panic flash crash to buy the dip. And it rips back up. Now he tries to do the same thing. And I don't know that it was Morgan. It might have been one of the other. You'd have to watch one of the Great Depression documentaries. I'm so bad at remembering these details, but and the names. But in any case, one of them tried to do it again in 1929, and the market just kept dropping. And I believe they lost almost everything. So, but in any case, eventually, someone did come in during the Great Depression and did start buying the dip. So these bands help kind of constrict the maximum volatility allowed during a period of time. And it does protect, it protects the integrity of the market in a way. Although what's interesting is that with small cap companies, what we have seen is this pattern where, due to the imbalance, stocks that gap up often open higher. And so it kind of has created this, perpetuating, it's like this self-fulfilling prophecy where, because it started happening, now more people do it, and now sometimes we see bigger and bigger and bigger gaps. Now we also will see times where stocks will halt going up and they'll actually open lower, and that is new to this year. And that, I believe, is a direct result of so many novice beginner traders in the market who are in the stock and then it's halted and they don't know what's happening. I watched someone, and I don't know if it was a joke or not, but someone was saying, Robinhood has halted all trading today. This is outrageous. We should file a class action lawsuit. And someone said, yeah, dude, it's President's Day. The market's closed. So, you have a lot of people that are confused about what's happening when stocks get halted. And so, if you're in a stock, and I can understand it the first time you've ever been in a halt, if you're in a stock and, all of a sudden it's halted, you could be jamming the buy button and nothing is happening. Or you could be jamming the sell button and nothing is happening. And maybe it was a joke. It was a good joke if it was. But it was believable. And the behavior of stocks halting, then, even though they're strong, rapidly flushing on the resumption, to me, just indicates that people are caught in a halt. They don't know what to do. They press the market sell order. Maybe they even put out more sell orders and inadvertently go short. And then when it resumes, you have this imbalance where you have more sell orders because you have the panic. It flushes, and then who steps up to the plate? Me and the other good traders out there that buy the dip for the next rip up. So then the trade there on the halt resumption is a dip and a rip, which is fine, but it's just a little different from what we used to have happen, which was halt up, gap higher. And we still have it, but we just have noticed at times, I think on the stocks that maybe just are very popular among retail traders, that we're seeing more of these sort of other moves. So anyways, here's a stock, CHFS, that, as you can see, squeezed from $3 up to $24. Oh my gosh, can you imagine? Can you imagine that? Well, probably don't have to imagine all that hard, considering some of the moves we've just even seen today. What did we see today? We had, oh gosh, now I trade tickers, not companies. So GTech, look at GTech, from $8 to $26, and that just went straight up. It went straight up today. It makes a move like this almost seem kind of slow. We're spoiled. So anyways, CHFS, it halts up right here, as you can see. So this was a halted up right there on that candle at 425. It resumed higher, continued higher into a second halt, resumes higher, continues higher, grinds up into a third halt, gaps higher, does a little dip, rips higher into another halt, opens higher, halts down, opens lower, fills the gap, coming back up. Opens higher, halts down, opens lower, gap, halts going back up, halts going down, sideways, consolidation, halts down, opens, halts, squeezes coming back up, pulls back, dip trade, halts going up, opens higher, surges higher, dips down, no halts, trading in range, halts going down. Looks like opens sort of sideways, then it opens lower on a second halt going down, squeezes up, halts going up, sideways, squeezes up, pull back, higher, pull back, higher, pull back, halt going up, looks like at 24. Opens lower, panic sell off down, dip trade back up to 24. Okay, so this was a 500,000 share float. So remember when I said when you see a stock that's a float of less than 5 million shares, you see a float of 1 million, 2 million shares or lower. That's something to keep a close eye on. This doesn't always happen, but when it happens, it's usually that type of stock. So I'm going to read this to you. It doesn't look like I have to put it on full screen. The whole text is there. So traditionally, stocks that surge up and halt up continue higher. Halt up, gap higher, and continue. And we sometimes see multiple halts back to back to back to back. When we're talking about parabolic stocks and big moves, we're usually going to see circuit breaker halts. It is possible that a stock yesterday that was priced under $3 as a tier 2 security will not halt until it goes up 20%. Okay, so even if that stock gaps up to $30, because yesterday it was priced below $3, the halt level is going to be 20% instead of 10%. So for a $30 stock to go up 20% and get halted, that's $6 a share. That may not happen. So it's not impossible to have a stock that does make a really big move and actually doesn't halt that often, or perhaps doesn't halt at all, And that can be okay, but usually we do see, when we have these really big moves, we usually do see halts. So the gap higher is created by that imbalance of orders that bid up the stock, so on resumption it opens higher. Now you could have the imbalance to the downside on a halt going down by more sell orders, selling it down, and then it opens lower. But in the case of a gap higher or a halt up, we often do open higher. And then by opening higher, short sellers continue to get squeezed, and long traders who miss the first part of the move may, at this point, start to just impulsively jump in, giving into FOMO or buying micro pullbacks. While there has to be a consideration for the type of stock we're trading, news, no news, listing exchange, price, float, when a stock is squeezing up, I will often buy into a halt. Or if I already have a starter position, I will often add into the halt. The goal would be a gap up on resumption and continuation. Now, there are some scenarios where I would not do that. In the instance of a stock where it's sort of chasing the halt level, so in that case, it kind of just hits its head and pulls back, hits its head and pull back, because it's not halting. And then when it finally does halt, because it was this kind of slow squeeze into the halt, and now with so many new traders, I don't really actually want to be in that high. In the case of something that does a rapid and aggressive rip through the VWAP into a halt, that's something I'm usually going to be more interested in buying and holding into the halt for the gap higher. So I would generally say the safest way to be in a stock that is about to be in a stock about to halt would be to take a micro pullback setup and then add into the halt, and that's for me. While stocks often gap higher, that's not always true. Sometimes a stock will open lower or open higher and then immediately halt, coming back down for a quick reversal. Market conditions help dictate whether or not this strategy is currently applicable. So market conditions right now, including huge numbers of newer traders in the market, is creating a little bit of erratic trading behavior. So that's making trading during halts a little tricky because people don't, I think the previous common knowledge among active traders that halts going up open higher is not common knowledge among new traders. So they're not respecting that philosophy. And in fact, they're in something halted and they're panicking. They're putting out sell orders because they don't understand what's happening. And then the stock resumes 5 minutes later and all of a sudden it flushes because all of these sell orders. That happens to be the case right now, but we'll see to the extent that that changes. So buying into a halt setup, the target traditionally would be open high and then a squeeze into another halt, back-to-back halts. So some of the best trades would be you get in, you're long for the first halt, it halts, it then opens high, maybe dips down for a moment, surges into a second halt, opens high again, surges right into a third halt, and keeps going. And you'll see some examples of multiple back-to-back-to-back halts as stocks just keep ripping higher and higher. Risk factors, though, the risk of the stock not halting and then I've just bought at the very high is a problem, which is why I often start with smaller size into the halt and then keep adding higher. The risk of false halts is real, where it looks like it's about to halt and then either the halt level moves up and it doesn't chase that halt level to the next spot and immediately reverses, or the halt level doesn't move up and it just, a big sell order goes through and it immediately reverses. And then potentially the swing is so violent, someone executes a big sell order here, it drops, and now everyone that bought for the halt going up is now panicking here, and then, you might even get a halt going down. And we've seen that before, and that is worst case scenario. We've gone from one extreme to another. So a false halt is when it looks like the stock is about to be halted, so it's pinned, that pinned price action for 10, 12 seconds, but not the full 15 seconds required, and then suddenly a big sell order goes through and it drops. This can happen because of a few very large sell orders taking out the buyers, holding the stock above the bid level or above the halt level at the bid. False halts going up can sometimes provide quick dips and then a surge right back to the halt level. Or if the halt level does move up, a dip and then a move up to the next level. But in any case, false halts do create a certain level of risk. Another risk is simply the fact that trading stocks around halts means that they are trading at extreme prices versus the last 5 minutes. But we also know that that's usually what we like in terms of peak volatility, meaning peak opportunity. So if we're in a market where we've seen several stocks reverse from halts and halt down, where they halt up and then immediately resume and halt back down, that would be a time where, because of that current market condition, I would be more cautious about buying halts. On the other hand, if we were in a market where we were seeing numerous stocks squeeze up and halt, open higher, surge higher, and continue, then I would be more aggressive about buying into halts. And that's just, again, that market sentiment. When you start noticing a pattern and it starts happening again and again and again, people start to try to, capitalize on it as much as possible, and it'll work really well until eventually, it stops working. And then people realize, uh-oh, this isn't working. And now maybe short sellers are capitalizing on the reversal. And then, it's that sort of self-regulating. Something might work really well, and then it kind of stops working, and then something else works, and then you sort of have to keep adapting sometimes. So the stop loss can be the low of the last 1 minute candle, or 15, 5, 10, 20 cent stops, depending on the price and the spreads. Generally, this is a trade where breakout or bailout does apply, but by the time you're bailing out, a bigger loss is possible. Yeah, I've had trades where around halt levels, I was instantly down $1 a share. It's painful when that happens because you're just instantly, just like that. It's like, whoa, that's a huge loss. But short squeeze potential, FOMO, FOMO-MOMO, where the MOMO is FOMO, people just jumping on, the feeding frenzy, the crazy exuberance. And I always ask myself, is this stock the one? Is this stock the one? Is this the stock that everyone's watching today, that everyone's excited about? Meaning, is it the obvious stock today? Is it the one everyone is watching? If the answer is yes, the follow-through will almost always be better. If the answer is no, people won't be watching the stock. It's more likely to fail. Sometimes we've had so many stocks moving at the same time that there isn't an obvious one, and this can be a little bit of a problem because you just feel that there's a lot of sort of distraction. This is going and then this is going, but what's the obvious one? And some days there isn't one, and that's a problem. So this is a strategy of capitalizing on FOMO and potential parabolic momentum in the market. Gap up and continuation. I have a period after the exclamation point, so let me change that because that's silly. So what slide are we on? Let's see. We are on slide 796, and I'm going to close this because I don't think we'll need that anymore. All right, so 796. So let's go down here to 796. Okay, there we go. Fix that. Okay. So this is a particularly dramatic example of a stock that pre-market was at like $1. It was nothing exciting. At the open, it squeezes up and halts going up at $1.20. Well, that's 20% from $1, so that makes sense. It halts pretty quick. On the resumption, it opens higher and continues into a second halt at $1.40. My goodness. Opens, continues in another halt at $1.65, $1.70. It opens here and it dips down for a second, and this provides us with our first dip entry. It then, on that dip right there, rips higher into another halt, $1.90. Another halt, $2.10, $2.15. Another halt, $2.40. Another halt, $2.60. Another halt, $2.80. Opens higher, and then here, a halt going down. And look at this huge gap. This gap right here, it halts going down at 275. It opens at 220 and halts going down a second time. It then opens down here and halts going up. Then it opens low, halts going up again. Then it opens high and halts going down. Then it opens here and halts going up. Then it halts going down. Then it halts going up. Halts going up. Halts going down. Halts going down. Halt going up. Halt going down. And then finally starts to slow down. So this is an area where you might say that the circuit breaker halts are not really serving the market super well because, first of all, this type of gap down, when you see a stock that halts this many times going up, you better be careful because the first halt coming back down, it will almost always be a big gap. And I've had actually, I don't remember if I was in this trade, but I've had trades where I was in the first halt going down, and just like that, I lose 50% of the position. It can be a huge drop. Now, it's true that sometimes the gaps going up can also be pretty huge. We've definitely had some stocks, and I'll show you some examples of big gaps, but that is not always the case. This is kind of a steady ramp up from $1 to $3, but then when you get that big move, the first halt going down is almost always bad. Gaps lower, second halt going down. So this dropped from $2.87 to $1.60. So you do have to be careful of that, and that's why with this strategy of trading into halts going up, ultimately you don't want to keep adding and adding and adding and adding because then you have your hugest position way up here at the top, and you can get caught in that drop. So you usually want to, I'm fine with adding a little bit, but adding after the second or third halt without some type of pullback is going to be risky. So this area here, maybe an add in here would have been okay. Don't know that I would have added out of the second halt. Now we're getting a pullback. That reestablishes low risk, which is stopped down here, so I can go long there. maybe add here, maybe add here, and then, okay, now time to take a little off the table, take a little off the table, take a little off the table. Maybe I'm still holding a little into the halt going down, but it's a small piece. All right. So here's another example of a stock that does a pretty strong red to green move. So, you know, it's kind of red at the open, then surges up on the gap and go red to green, halts going up right here at 750. It then opens right here at about 780. It dips down for a second. It kind of bounces off the high of the halt and then dip and rips up into another halt at 950. In a situation like this, probably if I was already in, I would maybe add on the dip and then take profit off into this move, or just do the dip and then the rip up to that halt level, maybe take off a little bit and hold a little bit more to see if it opens higher. It does. It continues higher and gives you another dip and a rip, but then it hits 1050, half dollar, and halts going down. So that dramatic reversal. Here's another one. This gave us a couple of bigger gaps. So from $4 up to 19, halting up, little pullback, halt up again, little pullback, halt up again, little pullback, halt up again. So you've got basically 1, 2, 3, 4 halts in a row going up, halt coming down. In this case, that halt coming down did not end up gapping down all that much, which is bullish. Anytime a stock halts going down and does not gap down big, that's bullish. Now we know when we look at the level 2 on a NASDAQ listed stock, we can see the approximate resumption price. So we'll see that in some of the videos. So I'll put this back up on full screen. But in any case, so we know that we can sometimes on a NASDAQ stock see the open price. So if we're looking at this and all of a sudden we're seeing an open price at $5, we know it's going to be nasty. We know it's going to be a big drop. But if we're seeing the open price at 875 or 9 and it halted at 9, now that's bullish. Dip, rip, halts going up. Opens higher, halts going up. Now we have a bull trap because the people that shorted in this candle thinking, okay, it's hit the top. This thing just went from $4 to $10. Halt going down, it's probably coming back to 4. So I'm short big. And then, uh-oh, that's not good. And now out of that, we get a big gap. So it halts going up at about 1050. It opens at 12, dips and rips up to 13 and halts again. Then it opens at 15, dips and rips up to 1650. Then it opens at 19. It surges a little, 1880. It surges a little higher to 19, halts going down. And there you get that bigger gap down. So from 1650, it opens down here at 1190. So, you know, that's, again, we want to be really careful chasing these. And I'd also remind you that when we're trading small caps, we're often trading stocks that are having the best day they have had possibly ever. This is the biggest day, biggest percentage gain this stock has ever had. Is this the day that you want to be caught holding it for the next 2 years? No. A lot of these stocks are not going to be stocks that you want to be holding for the next 6 months. So you don't want to get yourself in a situation where you bought super high and now you're holding and hoping. This isn't Tesla, you know, where you could get away with that maybe. It's not Netflix. These are stocks, not Disney. These are stocks that they're small companies. A lot of them need to raise money. They're very volatile. They can go up 20, 30, 40, 50% in one day. They can even go up 100% or more in one day, as we certainly have seen. 1,000% even in one day. But you just don't want to be caught holding really, really high. So you have to be super disciplined about cutting your losses on these types of stocks. So you're not in a situation where you now own it at $18 and now you're down 50% on the trade within 30 minutes. All right, so here's another one. So here we have a squeeze up right here, halting up at 942. So it squeezes from 7 up to 942, which is certainly more than 10%, 20% at least halts going up, and it resumes at $15. That's a 5-point gap. It dips down, it then surges back up over 15. That's a 5-point gap. That's, if you ever get something like that, a 5-point gap, that's like an instant winner. It's a home run. You take it off the table. Here's Kodak. All right, so on this one, we've got pre-market gap. It gap and goes, then sort of stalls out, pulls back, dips back down, and then right here, curls back up. So it bounces off the volume weight average price, and ultimately the high day breakout here is what gives us that squeeze into a halt. Halt 1, halt 2, halt 3, halt 4, halt 5, halt 6, halt 7, halt 8 coming down. Now on this 7th halt right here, it halted at about $50, and it opened at 60 and then halted coming down. So that was the biggest gap. Notice how the gap's getting bigger and bigger and bigger as it starts to squeeze up. Notice also how we have this divergence of declining volume into this high, big parabolic squeeze. So the problem here is that on the 5-minute chart, this was only open for like 1 minute every 5-minute candle, because it would open and halt, open and halt, open and halt. And you can see the dips, the lower candle wicks. So it was definitely giving us a dip and a rip, a dip and a rip, a dip and a rip, dip, rip, dip, rip. So buying those dips for the rip higher is definitely a strong strategy for trading some of these stocks. But then look at this. Halt's going down once, and it's at 56. So that's, okay, halt going down. And then it resumes flat. This was really strange. Typically, you wouldn't have this candle. It would just be resuming down here, down 50%. But it first resumed basically flat. And then it went into a second halt. And I was like, that's weird. It resumed flat, so I thought, is that now going to rip back up? Because usually they'd be gapping down. And then it was on the resumption of the second halt going down that we got this big gap from 48 all the way down to like 25. And then it halts going up. But it halts really quickly. And this was more than a 10-minute long halt. So usually the first halt coming down is more than 5 minutes. Usually it's more than 10 minutes, and it resumes at 5-minute increments. So sometimes 15, sometimes it's 20, sometimes it's 25, sometimes it's even an hour long that it's halted. And it's halted that long because there's such a big imbalance of orders that need to get executed. So many people have put out sell orders, sell, 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 sell. And there's not a lot of buy orders. So they're trying to match it up. And then eventually they match it, it opens, and it opens, an hour later, it immediately halts going up. And some people didn't get a chance to exit. And so then they see what happened, they put out more sell orders, and then it gaps down a second time. And then here you get a little bit of a bigger move where we did get that move back up into a halt and a gap higher. So, from a low of 22 back up to 44, and then it does end up coming back up, but that's risky stuff. So for us, generally speaking, we want to be focusing on the front of the move. And then, yes, you can do dip trades on this area here, but you just want to be careful not to be buying the dip too soon. You want to make sure that it's shaken out. So you want to make sure it's shaken out all of these traders, and then maybe catch a dip. So here's another one from 890 up to 10. This one, not the most dramatic, but squeezes up, pulls back, and then rips right here into a halt. Halt up at 980. It opens basically flat and then surges right into this next leg up, dips down, first 1-minute candle to make a new high. Doesn't work, it's a little too extended. UONE, this was another one that was really volatile at the open. So pre-market, gap and go. At the open, halts going up, halts going up, halts going up, halts going up, and halts going up. Then halts coming. So this actually goes from $6 up to $20, just about. Halts going down, opens a bit lower, but not dramatic, comes down a little bit, starts to kind of base out, but in this area is fairly choppy, a couple little pops here, but then all of a sudden, at a certain point you step back and you're like, this is holding its volume weighted average price. This is our kind of descending resistance, from here to here. This is, if it can get above this level, then look left and up, that's our target. And look, it breaks that level and it halts going right up at high a day. It opens lower and now through high. Little dip, and now you've got to move up to $40. And then halt coming down, opens after hours. A note that, remember how stocks don't halt pre-market or after hours. So if you're in a stock that's halted at halted at 356 on the top, 356.00, when will it resume? 4:01? No, 4. Exactly 4 p.m. Right at 4 p.m. it'll resume, because at 4 p.m. there's no halts after hours. So right at the market close, 4 p.m., that's when that stock will resume, which is kind of funny, but just the way it is. So 4 p.m. resumption. So if you get a halt at anything after 355, 356, 357, 358, 359, it's going to open at 4 p.m. and continue trading. And in this case, it opened and dipped down from 40 back down to 20. Here's another example. Now, this one was kind of interesting. On this particular stock, we had The previous day, it was the first day of trading, and there was actually a halt on the IPO, the initial public offering. Next day, it squeezes up and halts going up. And then look at this, look at this gap. So it halts going up right here, and it halted going up at like $15. It then opened at like 26 bucks and halted coming down. And then it resumed at like 28 and halted again going up. Then it resumed up here at 40 and halted going down. Then it resumed high at 45 and halted going up at 50. Then it resumed at just under 60 and halted going down, and then resumed and halted going down again. Then we finally got that gap down, and then into the close, this thing went from 40 bucks to over $100 a share. The next morning, goes from 60 all the way up to $160 a share. And then right there, halts going down and opens back at 80. So if you thought that some of the stocks that we were already looking at were crazy, certainly a chart like this probably feels almost impossible. How do you possibly manage risk? How can you even, where do you even buy this when you're having these halts and then you have the risk of, this gap down? Well, remember, this is a 5-minute chart. And on the 1-minute chart, we would have been doing the same thing as usual, which is 1-minute micro pullbacks, possibly, trades around the VWAP, first 5-minute candle to make a new high, watching pivots, watching this pivot here, which was 45.65. It broke that level there, and that was the squeeze back to the high. So the patterns are the same, but the moves are very volatile. And you may find at times that some of these stocks, especially the ones on light volume, are simply too risky, because when you have lighter volume, as this one was sort of at the beginning of the day, you have bigger spreads. It can instantly rip several dollars a share and get halted, or reverse several dollars a share and get halted. So it may be just too much for where you're at as a beginner, and that's okay. But you'll learn as you watch them that sometimes these do provide some great opportunities. And so this is one SCPS 5-minute chart again, similar to WNW. IPO opens, pulls back, after hours goes higher. The next day squeezes up to 17. This right here is a 5-minute pullback. There's another 5-minute pullback, and right at the open, we took that trade. We were long this trade right here, going into that halt going up. It resumes and halts a second time going up at 27. It resumes and gaps from 27 all the way to an open at 32, a 5-point gap, and goes into another halt at 36. It then does another 5-point gap to 42 and halts going up at about 43. It then opens and taps 47 before reversing and halting coming down. So in this situation, this trade right down here was a no-brainer. It was the first pullback. There was no way to know that this was going to halt like this. However, this was, I think, the same day or the day after that big move on WNW. So this was on 12/18, and WNW had just done that big move the previous day on the 16th and the 17th. So we were in a little bit of a hot cycle where recent IPO stocks or IPO stocks were making big breakouts. Remember, an IPO stock has literally no upside resistance. There's no upside resistance at all. So given that there's no upside resistance, they can sometimes just squeeze and squeeze and squeeze and make these really huge moves, which is what we've seen. So we got that nice squeeze, and this just ended up working out really well. Now, this is a 5-minute chart, and I can guarantee you inside that 5-minute candle, there was a micro pullback. You can see by the lower candle wick that it dipped and then ripped. And then this one just went straight up. And then this one dipped and ripped as well, but was a little extended. So let's look at this live trading video. Okay, so this is a video of buying right as the halt level jumps up. Okay, so trying to time that jump where I know the halt level is about to move up. So the stock is pinned at the halt level. This is GLSI. It's up 740%. All right, so I don't have the GLSI chart updated yet. So I'm sitting on the day, it looks like up 46,000, 23,000 on GLSI. Halt level is 47.11 right there. No chart on it yet, so we're just going to work just on the level 2. So halt level is 47.11, hands on the buy button. Okay, so there's the halt level. Now let's back that up for 1 second. So looks like I tried to buy and then canceled the order. I don't know exactly why, but so the halt level's 47.11. Gosh, big spreads. Okay, watch this. Okay, we're back to 47.11 right here. Now, what's the time? It's about 1:23 and 30 seconds. So since it seems to be about every 30 seconds, let's see, is that halt level about to jump? Now, the halt level going down is 38.55. Going up is 47.11. There it goes, right like that. Halt level on the low side moves up as well to 39. This one goes to 47.67 and it immediately rips to that next level. I tried to buy at 47.28. I was too slow. And yes, this chart is, don't just disregard that. I didn't have a chance to update my charts. I was probably trading a couple stocks at once. All right, so now we've got 47.67. So see how it's at 47.67, but then it dips down for a second. So, you know, this is one where right here it looks like it's about to get halted, and then sell order goes through. So now that 15-second timer has to start over. It's got to stay at 67 for 15 seconds to get halted. So that means the bid has to stay above that level. So people have to be bidding it and buying it up to that level. And look at that flush. Volatility. Higher price stock. But what I really wanted to show you was trying to buy right into that halt level. So let's just see. I don't know if there's another trade. Halt level's now moved up to 49.59. Looks like I sold the rest of it. Oh, and it looks like we ended up halting going down. So we can look at the halt going down. You know, finally just kind of rolled over. And does it flush hard? Yeah, looks like a pretty quick flush. Well, not too quick. But just like that, now halt level going down. And now it's pinned. So sometimes, and we'll talk about this in the dip class, sometimes I might buy a dip here if it looks like it false halts for a bounce off this level. It could false halt. But of course, the halt level could also move down and it could drop more. So, all right, so that was just one quick example there. Let's back this up. We've got a few examples. All right, so this is SLS, it looks like. It's IPO. Actually, I think that this might not be SLS because I am looking at the Airbnb IPO. Buying, so this is Airbnb IPO. Okay, so I was going over here the Airbnb IPO, and we had just had the DoorDash IPO, which gave us a dip and a rip. So this is a scenario where we could kind of say that this is a stock that's halted in a way. It's halted because, well, it hasn't started trading yet. So it's effectively a halt. So I'm going to look for the open and a dip and a rip. So we're going to have to move this a little bit forward just to get the IPO time. So I trade this in basically the same way where I look for a dip and then a rip. Oh, well, actually, we do have a trade here on SLS. So let's look at SLS here. Did I have other trades on it? No, okay. So SLS looks like the high was 1320. It's kind of pulling back a little bit, down 9,000 on the day. Oh, GLSI, yep, I remember that. So 1320, that's the high. So watching this for the first 1 minute candle to make a new high. Okay, let's watch this. This one's taking a little while. So we're starting to curl back up. So I drew this descending resistance line, support, and then becomes resistance here. 1366 is the halt level, looking for the long. There's a seller at 13. Can we break through 13? So we're hitting this descending or ascending resistance line, but we are above it. So if it can break 13, then we're looking for a test of 1320 on the highs. There we go. Bad fill. Would have preferred to have been in that before the break of 13. I was a little slow on the order. See, I got in just a little high and I canceled the order. So only 50 shares. It's better to not be in than to be in too high. So now we've got double top. But a quick long there for the break through the double top, but then because I'm in high, I got to take quick profit. It's back to break even at 13.20. Flushes back down in the red. So down 12 grand. So let's let it come back up. So back in, oh my gosh, look at that. So frustrating when it does that. My gosh, it's at 16. Ridiculous. All right, so do I just resume it like an hour later? It looks like, yeah, I do. Okay, so I just resumed the video here. It squeezed up to 15. I made some money on it, so now I'm up 6 grand on the day. So false breakout here, but then false breakdown here. So kind of a bull trap and a bear trap. Then it rips through this level, first pullback right there. Then goes from 1350 up to 1570. All right, so let me make a note on this. The time here, so 12:16. Okay. 16:02. Okay. So 16:02 right there, there's a halt level. It's not halting, it's pulling back a little off that level. Buying the dip right there, 1574. So a little dip, now looking for the rip through 16. There we go, taking a little profit on the break through that level. Not a huge winner, halt level 1628. It's now kind of moved up, so we're chasing that halt level. This is going to be a situation where holding into the halt possibly going to be a little riskier, just because it's already up this much. Putting the order at 38 to see if the halt level jumps up. Whoa, how did I change colors? And then we'll see if that continues. All right, so halt level just moved up to 1657. All right, there we go, right to 1657. And there's a buyer there on the bid at 43. So now we're starting to definitely go a little bit more parabolic. Let's see. Now it's black. That doesn't work. Okay. So we have a high up here, 1657. The halt level moves up again. So watch this. Taking a little profit off the table because now we're extended, especially on the 5-minute chart. Halt level is 1886, 1686. Buying here for the break through 1650. Watch here, 1650, then up to the halt level. Taking a little off the table on that base hit. These are base hit trades. Halt level 1686. If the halt level can move over 17, then we might get that quick break through 17. But it's got to move up. So it should move in about 10 seconds or so. It's, oh, there it goes, 1711. So added back there, now looking for the squeeze. Hold dollar resistance. There we go, we break through. I added, 1711 is the halt level. Holding at 89, that's a little high. It's a little high to be holding this. This could come back down to 15. Yep, and I just gave back a little bit on that, it looks like. Wow. Oh, am I still, oh, I did, oh, is that a dip trade? Hold on, back up. So I bought at 1682, right? I then added for the breakthrough 17, aggressive, tried to sell some at 1708, didn't get filled. Now it reverses. I think I hit the bid. I hit the bid right there. Good execution, filled the whole thing at 70. Notice that I did 2 orders of half. So I did half full. Sold half, sold the rest. Sold half, sold the rest. Instead of hitting the market with my full 15,000 share order, I sold half and sold the rest. So Control X, Control Z. So now it sells off. Now I'm looking for a dip trade. Hands on the buy button. Bought the dip right there, 1550. Let's rewind that for 1 second. Panic sell, flush. Look at that. So this is, again, something we're going to talk about more when we get into the dip setup. What I like when we have a panic flush like that, I like to buy those dips because, usually when you have something that drops $2 a share, it does bounce back up, especially when it's this strong. So I add right there, filled the full 9,000 shares at 15.50. Now, is it going to get, I took half off at 70, which wasn't all that great. But reducing my risk. If it goes below 15.50, I got to cut the rest of it loose. So hitting the bid potentially, if it doesn't, but then it does pop back up. So let's see, I don't remember how much higher this one goes. So first 1 minute candle to make a new high is starting to set up for a long back over 16 right here. So let's see if that ends up working. Now I see a 10,000 share seller at 29, another at 93, but it kind of looks like we might be starting to set up a break right here, moving back up. First 1 minute candle to make a new high is right here. Could take a starter down here, 65.70. Stop would be 50, the half dollar. It's already hesitating a little bit more than I'd like. Could hit the bid at 63 and get out. That made a new high by like a penny, and it didn't really rip. So that's a warning sign. That's a red flag. Breakout or bailout. So that's our daily chart. Let's see. Look at doing some research there. Let's see. Okay, and here we have the Airbnb IPO. So why don't we just go ahead and watch this just for the heck of it as well. We're going to talk about the Airbnb IPO, I think, in another chapter. But so Airbnb has just IPO'd, and I'm already long 2,000 shares at 47. So it IPO'd, it dipped for a second, and I am buying the break through the whole dollar. There's 48, there's 49. So now we're looking for the breakthrough, $49, 48. Now all of a sudden back to break even, 48.97, unwinding some of the position. No chart, not yet. And I'm still holding a position on SLS, but this is one that I'd been sitting and waiting for, and then all of a sudden it IPO'd, and I was like, oh my gosh, okay. So big bid down there at 45. All right, so I'm coming up here and updating the chart. All right, so here's our chart. So we had our IPO open, and I got long right here. It dipped, and then I got long at 47 inside that 10-second candle. Pops up to 49, took a little off the table for $2 a share. Now looking for an add over 249 and 250. Watch this. Look at this. I've got 3,000 shares long. Watch the break. It's a big seller, right? That seller stacked up. But this is Airbnb. So on the 1 minute, you can't even really visualize this as a bull flag. But on the 10-second chart, you can see consolidation 149. So adding right there long, the break of 149. New add is 150. That's the high of day if we break 150. 260,000 share seller. Okay, but this is Airbnb, and it's got 10 million shares of volume already in the first 2 minutes of trading. So let's watch the countdown. I'm in at 48.79, 2, 22, 20, 19, 14, 13. What's going to happen? What do you think is going to happen? You already know what's going to happen. Look at that. I've got 4,000 shares, so that's a $600,000 position. Watch it. 150. Let it come back up a second time. There we go. There's green, 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 green. Here we go. Nope. Taking half off the table. It's not breaking. Should have broken right there. 50,000. Why is it not breaking? 52. 52, 53, 52, 52, 52, 50, 53. So a $6,000 winner, not exactly what I was going for, and it continues higher. I do get back in it up here for the break of 60, so I'm now long 3,800 shares for the break of 60, whole dollar. Watch this. Oh, stopped out, I guess. Pretty sure I get back in now. So we're getting a little micro pullback here under 60, up 8,000 on Airbnb. Look at that. All right, let's back that up. So here we come, second try, 60 on the ask. So this is a 10-second micro pullback. Long at 67. Adding there 4,500 shares. Look at all that volume. Immediately to 62. Taking half off the table on the ask. 61, 67. There's 62. There's 63. There's 63. There's 64. Halt level 68.79. It does not halt. 64.50. Still holding 2,000 shares, up 6 grand. So this was a fun one, and you know we'll get into IPOs a little bit more, but yeah, that was you know, trading IPOs. It's definitely risky because it's so volatile. There's so much volume flowing through, but we do sometimes get halts on them. And in any case, the moment it resumes or the moment it starts trading is just like a halt resumption. Really, it trades in such a similar way. All right, so this one. Okay, so NTech. So halt level is 85 right here. We're coming to the end of this 30-second mark. Orders at 90. Halt level moves up right there. See, it moves up to 707. So the halt level jumped higher. Okay, so now I've got $7. I'm long at 90 average. Now it's tapped 7. What do you notice about this stock? Easy to borrow. Sometimes easy to borrow stocks need to kind of really show us a little extra strength. It's also tapping the volume weighted average price. So kind of buying right into the VWAP. It's a little risky. Halt level 707. There's 707. I take the profit off the table, recognizing I probably don't want to be long right into the volume weighted average price on an easy to borrow stock. I think this is just too obvious of a short right here. But let's see what it does. Will the halt level jump up again? It might. Yeah, it jumps up to 33. What happens? Stock drops. So people that bought for the halt bail out. So this had a problem, which was the intraday chart. The float on this NTech is, well, it says only 3.5 million shares. Find that a little hard to believe that it's easy to borrow with such a small float, but just looking at the chart to see if there's a reverse split, but there was, but it was a while ago. So anyways, that's an example of the what essentially is a false halt because the halt level moved up and the stock just wasn't strong enough to get to that next level. False halt on MTSL. Oh, okay. So what was the last one? Buying no halt. Oh, so all right, so let's hold on that. Okay, so we've got buying right into the halt level, right as the halt level jumps up. So got that. Wait, and that was the one that we just looked at, but that was NTech, not NFEC. Let me just confirm that. Okay, so NTEC. Yep. Okay, so fixing that. Sorry about that. So closing that one, and then we're going to look at the halt on Cali. Okay, so copy link, paste. All right, so this looks like a lighter volume stock. This one, yeah, this is super light volume. So this is up 15%. This is from a couple years ago. This is 2018. So, you know, this is a time where the stock's up 15%. And let's see on resumption here. Just trying to see what the news was on this one. So now it's up 23%. So in the first, basically right at the open, it surges up another 10%. And look at that volume coming in. So when I see the green on the tape, that's when I say, you know what? It's light volume, but tell me that's not moving up. It's moving up. You know, I mean, don't pee on my leg and tell me it's raining. I know what's going on. This stock is moving up. So we're looking for the break of 5. There's a seller at 5. It dips down for a second. We're up 18%. 473, 488, 489. Looking for the break of 5. And you can see the other stocks I had on watch are doing like nothing. This was just a period in the market where it's just a lot of nothing, and then you get one. You get one chance each day. And if you miss it, that's it. So there's Cali. There's our gap. So yesterday, you can see it squeezed up into the close to 4, then gaps higher to 450, opens with a tap just about 5, dips, and then we're looking for that breakthrough, $5. So regardless of the volume, the break of 5 is a whole dollar breakout. So there's a long at 5. Partial fill, though. I only got a partial fill, only 3,500 shares. There's a buy order there at 5. Now look at that, 525. I add at 525. Whoa, 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 whoa. Now, some of you saw something just like that this morning when we were trading GTech. Was it GTech? No, it was Quick, actually. It was the stock Quick. So this morning, Quick, you know, all of a sudden, I mean, it was crazy. In this candle right here, I took a starter at $10. Why? Micro pullback. News had just come out, and it was a micro pullback long at 10. It squeezes up. Remember, there's no halts pre-market. Goes up to 11. Goes up to 12. Hits $20 on the ask, and I was seeing orders going through at 17, 18, and 19. And I was like, are you kidding me? How is this? This is crazy. It then taps here, and then it kind of pulls back. But in this candle, basically what it did was kind of what you're seeing here, where all of a sudden we were seeing 17, 18, 19 on the ask, and green orders were going through. Put some orders on the ask, see if you can get filled. So watch here, it breaks over 25, and we've got that 10,000 share seller right there. So it breaks that, and watch. 28, 34, 65. And if it breaks 65, we're looking at 80. Now I try to take a little off the table initially. Obviously, this is a winning trade. But then on the other hand, if it can break over the high of 65, yep, 85. Now can we get to 6? Okay, that's the halt level. So this was even before I was recognizing the LULD. You can see it down here, but I didn't have it marked, and I didn't realize until I was teaching one of these classes, what the heck is LULD? It's always right there. And then I realized. So now I'm long this at 85 into a halt going up. You know, trading with more information in this case about halt levels only helps. So 525, so we're waiting for resumption on this. Let's see. Looks like it's a 10-minute long halt. Now look at that. So if, for instance, if we didn't see this $8 there, all we saw was 22, we would be probably thinking this thing might open at $22. Now it's a spread, 614 by 8. But right while it's halted, we're seeing approximately when this is going to open and what price. So 614 is low, $8 is high. It's a big spread right now. So I'm not sure exactly. But we halted at 565, or I'm in at 565. We halted at 585. So even 615 is a win. So when is it going to resume? Well, the halt time was 9:32 and 12 seconds. Resumption, since it's a 10-minute long halt because of the bigger imbalance. Usually longer halts are better because they gap up. Longer halts are better when you're long and you're already in the stock and it's halted going up because it usually gaps higher. But same with going down. Longer halts going down, it usually gaps lower. So now we're looking at $5.85, $6, $6.88. Doesn't necessarily look like it's going to be a big gap as we're coming within 10 seconds of resumption. All right, so we've got 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. So we should resume here. We're showing 625 by 688. Let's look at the first print. Still no resumption. And now we're showing 585, 688. And I'm going to give it a second, but this looks like it might be a 15-minute long halt. So we're still halted. Looks like a 15-minute long halt. And I actually put an order out on this at 997 as an optimistic profit target. Why not, right? So I threw an order out there at 997, and then I have another order to buy on resumption. So watching to buy on resumption. So my order to, let's see, I don't know if my buy order got filled, but we open high, and now let's let it dip. Okay, so let's let it dip for a second. The high was 740, 750. The long is now over 750. I'm taking a little profit off the table into a big squeeze like that. holding 1,800 shares at 525. It dips down. Right now, today, I would do a dip trade long at 55.65. Stop at 40. So I'm long right here. That's what I would do today. You can tell that's the spot. I should have done it, but this was a couple years ago. I wasn't doing the dip trades as much then. So right there, that would have been a nice trade, the dip. Now the halt level is, how high is it? $0.50 breakout trade. We're going to get the squeeze up to 8. There's 51, and we're at the halt level again. So now we're halted at 51. And on resumption, we get a squeeze to 8. I take profit, looks like 764 and 801. Now there's a dip opportunity here for a squeeze through 845. But realistically, this is already, look at that, 877. It goes without me now. 877, it keeps going. Halts up, but then opens and sells off. Up 95%. So, you know, this one's not picture perfect. I think some of the challenges on it are that the volume was just lighter, but still interesting. All right, so here's another one. Let's see. All right, so this is MTSL, false halt. Okay, so let's fast forward this at minute 3. Oh, so we're, wait, 338. This doesn't go to 338. Oh, $3.38. Okay. All right, so this is an older one as well. And by the way, when a stock is halted, you can put out orders to buy during the halt, just like you could put out orders to sell during the halt. And I will sometimes do that. So if, for instance, a stock is halted coming down, I'll sometimes put out orders to buy, you know, where I might think, oh, maybe I'll put out an order near the volume weighted average price, or maybe I'll put out an order, you know, near a whole dollar, some psychological level. With light speed, you cannot do that on Amex or NYSE stocks, New York Stock Exchange stocks, but you can do it on NASDAQ. You also cannot do it on certain routes. So we don't have I don't think we have a stock that's halted right now. I don't know if anyone can tell me, but probably not. Just the odds of it would be sort of unlikely, but let's see. Well, HSTO, but I don't know if that's still halted. HS. No, so it's not halted anymore. Okay, so anyways, no stocks are halted right now. But I think I might have shown you this earlier, where if you use the light speed route, they will usually reject it and not let you place an order while it's halted. But the direct routes usually will. So, you know, if you're in a position and you're long, you need to sell, and it's a halt going down, you can put out an order, and it'll fill, you know, up to the low of your limit price if it's a sell order. Or if you are in a halt going up, and let's say, you know, this HSTO just halted at 170, and I'm thinking, okay, I want to put an order at, you know, 175, because I think it might open high, because maybe I'm seeing 188, but maybe it'll dip, pick up my order, and then rip. You know, it might. And so sometimes I'll put those orders so they're ready to go. So sometimes while a stock is halted, I will actually have orders ready to go in my order entry window, you know, over the halt price. And then I'll have others that I place that are live right here. And so my hope is that we get a resumption and it dips and picks up the orders. Now, one thing that will change that is during the halt, the price will change. And so if initially we're looking at something halting going down, it was one of those big movers and is now halting coming down, and it was halted at 40 and we're showing first a $20 resumption. Maybe I put an order to buy at 20. And then a couple minutes later, as we're getting closer to the resumption, the prices here are now showing 25. So then maybe, okay, well, I cancel that order, put a new order at 25. And then right before resumption, maybe it moves up to 28. So I cancel that order, put the new order at 28. Or maybe it moves from 25 back down to 22. And I'm like, well, I don't want to be buying at 25. I want to be buying the dip. So then I have to move the order back down. So if you do that during the halt, you have to be watching the prices very closely to make sure that where your order is still makes sense. What might make sense the moment something is halted may not make sense as you're getting closer to the resumption. It might, but it might not. Now, you know, I still think with most orders, it's sort of a first come, first serve. So if you're the first person to put your order at $10, then you're going to be the first one filled. If 5 other people put their order at $10 after you, they're behind you. So usually when you put an order on the bid, like a buy order at NASDAQ, you know, just like that, you're first in line there. So if you start seeing selling, If you were the first one to put the order there, you created that spread essentially by putting an order at 10:01. You should be getting filled first as someone is selling. If that's not happening and you're using smart routing, then I would say it's a smart routing issue that you're not getting filled first. So if you're using direct routing, it should fill you first. So anyways, that was just a side note. So sometimes I will put out orders while a stock is halted, either to buy it for the resumption or to sell it maybe for profit, or also to sell it for a loss, or even to do a dip trade, depending on the scenario. But you may have, that may also be broker to broker, because some brokers may not, if you only, like with TD Ameritrade, if you only have smart routing, I don't know if they let you place orders while stocks are halted. Okay, so MTSL. Okay, so we've already seen this one. This is the one where I bought into this halt. So I was bidding this up right here. So I was buying. I was like, yes, I want to buy into the halt. And then what happens is someone sells 50,000 shares or whatever it is, and look at that sell. They sold all those shares, and now it drops. So now I'm in at that level. But now, if it doesn't halt, it's a false halt. So it's dipping down. I wouldn't have minded filling a little bit, but now it's a false halt, you know? So that's a problem. So now we've dipped down. And now do we surge right back up? So what I have found with false halts, and it's made me cautious about buying into halts, is that usually when you buy into a halt, you get a partial fill. Usually, if I place an order, I don't get the full order filled. Typically, the only time I would get the full order filled is if it does a false halt. So I'm actually a little more cautious about buying into a halt, but in this case, I'm in at 322, which isn't a bad entry. That's not a bad average. It's going to be a loss, and I'm going to be able to unwind it. It's certainly not as bad as if I was in at 38. And I believe this one does come back up to that level, but in any case, it was a false halt, which is always a little disappointing. All right, so breakout coming out of a halt on MDGS. So let's check this one out. Okay. All right, so let's get oriented here. So I'm going to go auto. Okay, so what just happened? So MDGS, we got to rewind this. So it looks like I was already in it. Hold on. I don't know if we've had a halt yet. It looks like I just bought for the break of the whole dollar. The LULD level I can see right there at 756. So I'm in at 7. Now there's 756 on the ask. But of course at this time I don't recognize that this has the potential of halting going up because I don't have my indicator turned on and highlighted there. Once I discovered it, I was always watching it. But before that, these older videos, I wasn't noticing it. So I took some profit off, not really realizing that that wasn't a hidden seller. Because it also kind of looks like a hidden seller. It's like, man, the stock's not breaking. Oh, as soon as you see that stacking, that's when you recognize it's getting halted. So you have such an advantage. I mean, literally, I was trading for, this is like 2017, 18. I was trading for years and years and years before I knew about the halt levels. No one taught me, and I didn't know, I was mostly self-taught. And so these are things where I just never heard anyone else talk about it. And I don't know, I just didn't know about it. So anyways, here's resumption on this. So we open high, so we halted around 750. We open high over 8, we dip down. This is setting up a dip setup for a dip, long right there, possibly. That's what I would do right now. For now, the breakthrough 50. Now, can we break through the half dollar? I can add here at 50. If we break 50, 63, 80, 93, 90. Next halt level, 1008. There's 79. I could take some off the table here. So, back in those days, I was definitely trading more conservatively than today. Although, if we look at the total volume, we're also noticing that back in those days, we were seeing generally less volume. It's up 500%, but only 300,000 shares of volume. So this was just very typical of a few years ago where we were seeing just lighter volume across the board. I hope that we continue to see high volume. There we go. So there's a nice move up into the 70s and 80s. All right. Is it going to break over 9? There we go. So it looks like I do a quick ad for the break of 9. This is where you want to take a little profit off the table on the break through that level. Now this broke firmly through 9. There's no question about that. It hit a high of 930, but it's got to hold over 9, and now it's back below it on the bid. And I'm in at 860 with 6,000 shares. So now it's kind of like, I don't know, this doesn't look as great. Yeah. So it gets back up a little bit, but I kind of unwind the position close to break even. This is a 1 minute pullback underneath 9. It does break back higher, but we're still light volume total, and then it does sell off there. Okay, so I'll pause that. So this is going to be, let's copy paste this. All right, so this is a reminder, live trade, trading halt trading gone wrong, managing a big surprise. I sold half in a profit and held the rest through a big loss, but added off the lows and sold coming back up, reducing the loss versus a panic reaction. Selling half was important because it gave me an ability to add back on a dip, in this case, a huge dip. Remember, volatility equals opportunity. All right, so let's see what we've got here. Which one was this? Oh, this was PHUN. Okay. Yep, so PHUN. All right, so let's make this full screen. Yeah, I thought this one. So this one. Okay, so I'm not in it right now. The halt going down is at 284. Okay, so it looks like we're going into a halt down there at 284. So it's pinned, clearly not looking great. So there's the halt. Now the price is right now showing 84, 80, 60, 80, 80. It's got 17 million shares of volume, 58, 50. So initially wondering whether or not we're going to get a dip trade on it. Okay, now hold on. So there it opens at 202. That one's the big drop. And did we get an indicator that it was going to open that low? Let's just look back at this for 1 second. No, it was still showing. Okay, so it was showing like 284, and then all of a sudden it's showing 230, and then I don't know, it just opened low 202, halting going down again. 200,000 share seller. Okay. So I think what I might have done on this. Now, this doesn't feel like it's the right, this is, unless it was RMBL, but I don't have the chart up on RMBL. Okay, well, let's look at RMBL for a second. So RMBL, I've got 500 shares at 1081. Now I'm really confused about my my comments on this one because I don't know which trade. I wonder if this video link is the wrong one. Well, in any case, interesting on PHUN. A reminder to be cautious on those. Yeah, I don't know. This is weird. I'm not sure which RMBL doesn't really. Yeah, I don't know. This is weird. I'm gonna have to. And now I'm curious which trade that was because, gosh, but no, I don't know. Halt trading gone wrong, managing a big surprise, sold half in a profit, held the rest. Interesting. Well, unfortunately, I guess we'll just have to. Well, we could just change the slide to PHUN halting down. Okay, we'll just leave it like that. All right, so with that, we are at the end of Chapter 8, Setup 7. So our next chapter is Chapter 8, Setup 8, which is on the dip trade. All right, so for those of you guys attending live, this is going to be the last chapter here for today, so we'll pick up Chapter 8, Setup 8 tomorrow. Those of you guys watching in the Learning Management software, continue on as you'd like. I know some of these are long chapters, but I hope you're getting a lot out of them. And as always, if you have questions, join us in chat and let us know what's going on. All right, so we'll continue on with Chapter 8, Setup 8.